YouTube. You caught me shopping for properties late at night again. I'm looking at this one here in Lubbock, Texas. This is a traditional rental. Um, there's fractional shares of this listed on Lofty. Let me back up. If you don't know who I am, I'm Joe Cacciapaglia. I'm a real estate investor and agent. I work primarily with real estate investors in San Antonio, Texas. But I've been using this YouTube channel to share some insights onto some of the platforms online where you can buy pieces of real estate, like fractions of ownership, where, like, for example, this one you can buy pieces starting at $50 each. It entitles you, let's see, so this property is broken up into 3,295 pieces. It entitles you to, your pro rata share of the rents, ownership and appreciation. Um, I've been looking at a lot of these sites lately, or a couple of these sites, but a lot of the properties, trying to share a little bit of insight into how I look at them, the type of due diligence I do, whether or not it's a property that I think makes a lot of sense to purchase. And so let's jump right into this one. This is and if you're if you want to pick up one token for free and you haven't signed up for Lofty before, check the links below. There's a way to do that and just get a free token. Something that I did to get started. And as far as I can tell, there's no catch, right? Like, they give you that first token. Basically, they're just hoping that you're going to buy more. So what do we got here? We got a 4-bedroom, 2-bath home. 1,600 and something square feet. What do they tell us here? 1,676. I was looking through the pictures. It does have a converted garage into living space. I really hate that in the long run. They're difficult homes to sell most of the time. There's typically, you see them a lot in, parts of town that become really just renter heavy, where you don't have a whole lot of owner occupants. At least in my experience, I'm not in Lubbock. It could be a little bit more common there. Like, if you look at this property, this ceiling is just crazy looking. It looks like it's corrugated metal. Um, Let me see what we got next. There's a couple other things. I have no idea what this flooring is. I don't know if that's just a weird picture or what. Like, I literally don't know what that material is. I mean, it looks very strange. Maybe it's just a tile that doesn't picture well, like it flex weirdly, but um, overall, this is, we have properties like this here in San Antonio, but they're typically in some of the worst parts of town as far as places to attract tenants that are going to be good long-term tenants. Now, I don't know if that's the case here, but that's my initial, thoughts on that property. Why am I looking at this? Well, I was checking out Lubbock. It's a market that's grown really rapidly. So this is, again, I'm checking the Wikipedia page. It's where I always like to go first, because they put U.S. Census data in the same format for every single city that you can find. And so I just like it. It's a quick and easy way to look at, okay, what's the growth been? Lubbock's really great in that regard. I was looking at the Zillow home price trends, and in a lot of markets you had a dip right around here, and they flattened out, but there's not a big dip. And so, something that I like, the fact that typical home values are so low. As people move to more affordable markets, that, I think that a lot of these ones that have lower prices are going to benefit from that. I know it's part of the reason I'm in San Antonio, both to live and as an investor, is because, our relative pricing here is low compared to other similar sized cities. Um, but so I'm really hoping to pick something up in Lubbock. I don't know that this property is going to be the one, that, because, just looking at it on the surface, it didn't look amazing. You can see they have a really high rental yield projection. One of the things, and we've talked about this before, but that when they create these projections, they just take your gross rent, your property taxes, insurance, property management, the LLC, the administration fees, and then they go straight to your cash flow. And one of the things I wanted to do is actually add those up and make sure that it's not just that those are just the things that they're showing, but that's actually everything that they're doing here. So 2, 4, 63. Oh, I added that. Minus 0. Yeah, and they're just rounding to the nearest dollar. So 11,950. So that's all they're doing. And so if I were going to put, typical market assumptions in here before calculating a cap rate, I have to at least add in vacancy and collection loss. I have to add in a repairs and maintenance. Even if it's a brand new rehab, you're still going to have ongoing repairs and maintenance. I want to also have leasing commissions, if you're in a market where you're going to pay those on turnover or renewal fees. All of those things I should be baking into my projections when I'm calculating a cap rate. And so, this I believe is just inflated. Um, you'll see that on every single one of their properties, though. So you just have to keep that in mind. I think even if you back that out, you might still get to a 6 or something, and it's not necessarily a terrible cap rate. Um, although I think you can find that on a nicer properties in other parts of town. The other thing, you have to think about, well, okay, wait a minute, if we have a 6%, how are we getting to this 17% yield? And obviously it's a levered yield. And so that made me think, oh, does this have an older loan on it? Maybe it's got, really good debt. And so looked at the loan, which, this is why I really like Lofty. They do give you all the info that you need, or most of the info that you need. And like I said, I look, many times, I also like to look at a lot of off-platform info. So, okay, he's got an older loan from 2018, and it's 4.875. Um, so that's not really going to get you there, right? Like that type of leverage on this property isn't what it is. And so, yes, it's going to bump up your levered return a little bit if you've got a 6 cap and you're really, and you're paying 4.875 or whatever I just said. You've got some additional return there. But that doesn't bump you up this far. And so this is all really created by that structure where the owner, the previous seller, is paying off the debt and eventually diluting you over time by doing so. It's giving you this boosted yield up front. One of the things I've really struggled with is, trying to look at these as traditional investments is whether or not this is really a good feature or if this is a bug, right? Like I can't decide if seeing this yield that I know isn't going to maintain at the size it is, I know could disappear at any time if the debt gets paid down. And it's going to fluctuate rapidly. Like just when there's a vacancy, they're going to, it'll turn to 0 sometimes when they're not paying out in a certain month. Like how much, I almost want to ignore this altogether and just pick properties that I like the underlying asset and I like the underlying cash flow picture. And that seems irrational, right, to do that because for some period of time you will collect these funds. And so I still am struggling with how to model this properly. Um, one of the things I think that I just have to start buying some of these ones that I don't really, that are working this way, and just to see how they go. And I do have several that I've bought so far. But so let's look at this one a little further. So, okay, it's paying out a really strong yield. It's hard to understand how the property itself is able to afford that, but it's because the owner, they sell off pieces of their equity that get a disproportionately large chunk of the cash flow is basically what's happening. But I want to really understand, is this a property that can maintain that? Is it going to appreciate in the long run? If they ended up liquidating it, am I going to get hurt? One of the things that I think is interesting, it actually has pretty low leverage, right? It's the loan is older. It's only has 95,000 left on it, and the market cap that we're being asked to pay for this 164,750. Now, one of the interesting things on this one is that just doesn't really match up with Let's see. Do they not have they don't have the house canary on this one? But it doesn't match up well with the appraisal. Oh, actually, let me back up. I already have the open. Um, yeah, using the sales comparison approach, they came up with 155,000 for this. So you're looking at like a $1,000 premium. Okay, well, that's, like I said, the appraisers, it's just one person's opinion. They're a professional. They're trained to give their opinion of value, but they're not always perfect. So I like to look at a couple other sources. Always look at Zillow. Again, okay, that matches closer to the appraiser um, than it does to what they're asking for the property. So that's a little worrisome, right? So according to this, we're paying a $14,000 premium, which is, almost 10%. So I went to homes.com, which is another one that I like to check. They're 153. So again, we're not doing great on it from a value perspective. Which I don't love. And so I also looked on Realtor. Realtor told me 151, 300. That's so really three strikes against the dollar amount that they're asking you to pay, right? This is 164. One of the things is all of those, you know, what are we getting in addition to, we're getting a tenant in place paying rent. If you're going to buy this, you're going to have closing costs. If you were going to buy it out in the world. And so let's see, what did they say? They actually just said, hey, our underlying asset price is 162,750. I don't really understand where they came up with that, but they've got their appraisal, closing costs, everything. One of the things I was looking in the Discord, and they did say they, had recently spent some money renovating it. Maybe that's the difference, right? Maybe they took that appraised price and then added some money for that. I'm really not sure. Remember, though, this value really only comes into play if they have to sell this property in the real world. If this is one that is just going to be held long term, then you don't have to really worry about it. And so, one thing that has made me, sort of stick with this one and look at it is, there's the seller on this one, and the one that's going to maintain management of it is they're managing 532 rental units currently. And it appears that their goal is to just hold these long term, take some of their money out with, by selling tokens. Um, but it doesn't seem like there's any, you know, any intention of selling it quickly. Now, so that's good. So maybe, hey, I get a 17% return for a couple of years. That makes up the difference of what I overpaid for it. Lubbock's a market that I think is going to continue to appreciate. Um, there's, I almost think I could talk myself into buying this. This is the initial offering of it, though. And so what I think I'm going to do is wait and see, do these tokens, uh, are they going to start selling for cheaper in the future once it's not that initial offering, right? They can only sell for 50 now. I think the guy is doing a good job of talking up the property in the Discord. I think that the yield is definitely attractive, and the people that are just really comfortable with the way these yields work might all jump into it. Um, I am still like, trying to look at this as if I'm buying the underlying property. And, that's just what worries me a little. Let me just show you a couple other things that I checked just because I've got the tabs open. Any of the Texas counties have something similar to this where you can just look up the property on the appraisal district. You do see that this is owned by the right, Lofty LLC. You see what they assess it for, 132. Most of the time, in my experience in Texas, this number is not an accurate number. Your assessed value and your market value are typically very close. This shows you that what I do like to look on here for is for the square footage, that it matches up with what they're offering. And this one I think matched up perfectly. Yeah, which is always great, right? Especially when they have that enclosed garage. Always makes me worry a little bit. But it looks like the right number of square feet. Um, You can also usually see these deed records and see, when they purchased it. And this is interesting, right? Like Ricardo Hernandez, Thunderson. Hmm. Because this is around the time frame that loan was taken out was in 2018. I wonder if that person, no, Austin Hughes is the person who owns Thunderson Homes. So I wonder if he bought it subject to that mortgage. Let's go back and look at that loan. See, this is what, I get really into doing this, and this is what you want to do if you're trying to do due diligence on a property, right? Like, so who's the borrower in this? Borrower's rights. Um, well, usually we can just go down to the bottom and see a signature line. Ricardo Hernandez. Okay, so the current loan is in the name of somebody who owned it before the person who's selling it to Lofty. So that's an interesting thing to note. It makes me even a little bit more worrisome. If they bought it in a subject to transaction, it adds an additional layer of risk, even though I know the Lofty sales are essentially another subject to transaction, but one where the original mortgagee is usually or more is usually making the payments. Yeah, let's see. The original borrower. I always get mortgagee and mortgagor confused because they're backwards, right? So I think it's actually the original mortgagor. Um, so let's see. I looked at the flood map for this. It looked fine from that regard. Um, I didn't even get into looking on doing the Google Street View. I don't think that's necessary because I think I'm just not going to buy this one. But I just wanted to share it with you because there's a lot of reasons that somebody might. The one more thing that made me a little bit worried about is this income going to be maintained? So, they say 1,600 per month is the current tenant. Um, I'm curious how realistic it is that that's going to be maintained. Um, if you look at the rents estimate, it says it's only 1162. Oh, did I close my rentometer tab? Let's see. And I know this is not always perfect. 4 bedrooms. Check. Oh, I should be. And I do think I might have done this the other day too. I don't always remember to click on house. Right, that was quick. That was too quick. Please resubmit. Out. 4 bedrooms. There we go. Okay, so median 1,600. Okay, so this matches up, right? It's in the median. It's below the average, even the 25th percentile. So maybe that Zillow rent number was no good. And again, though, even rentometer, I don't love it, but it is. Um, or rentometer. That's why, yeah, I don't know which way you're really supposed to say it, but so maybe that 1,600 number is a decent number. I am still just, my main issues why I'm opting to not buy any of these right now are one, at the price they're asking us to pay is just too big of a premium, um, relative to what it looks like the property is really worth. Um, it's not a great cap rate. I mean, they're saying it's 7.25, but really, I think if you back out the numbers I talked about, I think you're closer to a 6. Um, I mean, it's still fairly decent, right? Like it's not, you can't find that in every market, but for the quality of the home that you're getting, I mean, I'd rather pay a lower cap rate and just buy a brand new home here in San Antonio. Uh, you know, I'm not going to get this rental yield. Um, but if I guess if I did the sort of financial engineering that they're doing here, that I could get it. But it is, I think over the long term, if you hold this till loan maturity and then sell it off, your rental yield ends up mimicking your cap rate, right? And so, I'm trying not to get suckered in by these high initial yields that dissipate over time. It's tough to know how quickly that's going to happen. But if, for the ones that I'm going to jump in on the yield, I want to really make sure that at least the property value is there, which we don't have on this one. I want to make sure it's a property that I really would like. This just doesn't cut it for me. I think that condition wise, I think it's just not there. And I don't know. It's one that I'll follow and maybe pick up some in the future. But I'm not going to do it now. I think, yep, final answer. So I'm curious, let me know, is this something that you're investing in? Would you buy this property? Would you buy the whole thing? Would you, pick up a couple tokens just to see what happens? Let me know in the comments. I actually, a couple of you have messaged me and I've had some great discussions with you. It'd be awesome if you put some of that info in the comments for everybody. In any case, until next time, I'll keep making mistakes so that you don't have to.